Now, if you're anything like me, you're currently trying to build out a long-term dividend-paying portfolio that not only is going to pay some of your bills in the future, but at some point going to pay for things like your rent, your mortgage, and hopefully all your expenses later on. Now in this video specifically, we're going to go through 6 different monthly paying dividend stocks that are all relatively high yield, have more or less safe dividends, and have the potential to pay for your rent with a lot less money invested than you probably think. So if you're a dividend investor looking to invest into monthly paying dividend stocks that could potentially even pay for your rent, if not more things in the future, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So number 1, the first monthly paying dividend stock that could potentially pay for your rent with a relatively small amount of money invested into it, because it does yield a 7.63%, is ticker symbol EPR or EPR Properties. Now it says right here that EPR Properties is a leading diversified experimental net lease real estate investment trust or REIT, specializing in select enduring experimental properties in the real estate industry. Now, although EPR's dividend is a little bit shaky, it is on the borderline as far as Simply Safe Dividend's dividend safety meter, it still does offer some upside potential with the future rate cuts that are happening very soon here. And like I said, if you're willing to take upon this risk, you are going to be offered around a 7.63% starting yield. Now, EPR's dividend growth historically is sort of rough, considering there was a dividend cut, and this is along with a lot of other dividend paying stocks back in 2020, but since then they've been raising their dividend significantly, almost back to the point to where things were at pre-2020 lockdown. Now with situations like these, you could look at this as a potential negative or a potential long-term buying opportunity that maybe you can long-term look back at like you were getting it on a discount. But for those investors out there looking for monthly dividends and looking for some stocks that could potentially help you pay your bills, why not use a REIT like EPR? Another real estate investment trust, a monthly payer that could also potentially help pay for things like your rent, is ticker symbol APLE or Apple Hospitality. Now, Apple Hospitality is a self-advised real estate investment trust that invests in income-producing real estate, which we love. And this is primarily in the lodging sector in the United States or hotels, etc. Now, Apple also has a 50 as far as dividend safety goes, so again, a little bit borderline, which again could be looked upon as risky or a buying opportunity. The dividend currently for Apple is around 6.67%, which is higher than what we've seen over the last 5 or so years. Now, dividend growth for this one is going to also look a little bit rough, but again, you can look at this as a negative or buying opportunity and depend on your outlook as far as lodging goes, etc. But all in all, if you are willing to take upon some risk, which this one definitely has a little bit at least, Apple's going to pay you around 6.7% yield, which is going to pay you a ton of dividend income with a relatively small amount of money invested. Another real estate investment trust that's offering a really high yield, could potentially pay for your bills with a little bit of money invested into it, and is offering a 60 on the dividend safety score, is RioCan or ticker symbol RIOCF. Now, RioCan is a very familiar REIT. I'm sure a lot of you guys have heard about this one. It says right here, it manages and develops retail-focused, increasingly mixed-use properties located in prime, high-density, transient-oriented areas where Canadians want to shop, live, work, etc. Now, this used to be one of the most popular REITs. I used to see a ton of dividend investors talking about this one, although I don't really hear about it as much anymore. Now, RioCan is currently offering around a 6.4% forward starting yield, which if we look at the last 5 years, that is higher than what we've seen, although because interest rates are going to be cut very soon here, real estate investment trusts have been rocketing across the board. Now, as far as dividend growth goes, unfortunately, RioCan only has 2 years of dividend growth streak and only 2 years with an uninterrupted dividend streak. Now, this is because a dividend cut back in 2021, but before then, RioCan was paying a slow and steady growing dividend for a long time. Now, because of the risk that's involved with this one and because of the current state of this company, you are potentially going to be offered a buying opportunity with, like I said, a starting yield of around 6.39%, which again could be a little bit risky as we see right here, or it could be a buying opportunity. But if you're looking for monthly paying dividend stocks and or REITs that are still, even while the market is trading where it is, offering well north of a 6% yield, RioCan could definitely be a good opportunity. Another monthly payer that could be offering a buying opportunity, especially where it's trading as of right now, is ticker symbol LAND or Land. We're talking about Gladstone Land. Now, Gladstone Land is currently offering a 4.07% forward yield, does also have a borderline safety as far as dividend safety goes, and even with the most recent small-ish recovery as of recent, it's still offering well above a 4% starting yield, which the average 5-year was around 3.39%. Now, dividend growth for Land has actually been decent ever since around 2014. This dividend has been going basically sideways and or up a tiny bit, but over the last 10 years, the outlook is pretty grim. Now, I did forget to mention that Gladstone Land is a publicly traded real estate investment trust that acquires and owns farmland and farm-related properties located in major agricultural markets in the US. So if you're interested in land, if you're interested in some of the highest quality farmland real estate and want some exposure into that, land could be a good one to look into, especially if you're looking for monthly dividend income. Now for a few higher quality plays, ADC Agree Realty, one of my favorite REITs across the entire market. This is a really high quality retail real estate investment trust. And like I said, one of my favorites. I've been talking about this one for a while now. With the most recent recovery, unfortunately, ADC is only offering just above a 4% yield. And I say only because just a few months back, ADC or Agree Realty was offering almost a 6% starting yield, which unfortunately I, like a lot of you guys, probably slept on. Now, even though ADC does pay a dividend monthly, the dividend growth has been a little bit slow, as you see over the last 10 or so years. As you can see over the last 20 or so years, it's only a 2% raise per year, which is very slow. But over the last 5 years, ADC has been picking up the pace, paying more and more in dividends a little bit quicker than we've seen historically. Now, for those investors out there that want more exposure to high quality, maybe the highest quality real estate across the markets, and one of my all-time favorites as far as real estate investment trusts go, but is willing to pay a pretty penny because, like I said, this one has recovered quite a bit since I talked about it in previous videos. Ticker symbol ADC, still one of my favorites across the entire market, could be an opportunity or one to look into. Now, last but not least, of course, I saved the best for last. My favorite, Realty Income, is still, as of right now, offering a 5.27% forward yield, which is crazy because just a few months back, we were around a 6 or 7% forward yield, which is massive compared to the 5-year average. Now, the dividend safety for Realty Income, as far as that goes, I think we're going to be just fine. Realty Income has been paying an uninterrupted dividend streak for around 55 years and been raising their dividends consistently for around 29 years now. So Realty Income is a high quality REIT, and this is one of the main reasons Realty Income is my largest REIT position across my portfolio. So with the dividend safety and the slow and steady dividend growth, Realty Income is going to probably remain a large position in my overall portfolio for many, many years to come. And for those investors out there that are looking to build out a position to help pay for things like bills, rent, your mortgage, whatever the case might be, take my word for it, someone that owns almost 3,000 shares of Realty Income at this point can definitely cover multiple of my bills every single month, which is amazing. So there we have it, guys. Those are 6 different monthly paying dividend stocks, and in this case specifically REITs or real estate investment trusts that all have the potential to pay for things like your rent, your mortgage, or other bills in the future. Now, as you can see right here, my long-term portfolio, I own a ton of those different names that we talked about, but I own a little bit of everything. I have around 40 different positions, different stocks and ETFs across the markets. But now that we went over all 6 of those different monthly paying dividend stocks, I lastly want to hear from you guys down below. If you could only buy and hold on to one of them, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.